My question is, well, if all you analysts are so smart from Harvard and Brown and Yale, why did 400 of you miss $250 billion?
What's going on, guys? K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Hopefully you guys got this update. If you didn't, make sure you turn on the bell notifications because usually we don't put out videos this late, but obviously due to the price action, I thought to myself, now's probably a good time to sort of reiterate a lot of the things we've been talking about. And I also remember when I first got into crypto and sometimes the price is falling, you start to freak out, right? It's nice to have a little bit of assurance as to what is going on. But then again, the question is, should we be panicking? I have a bunch of things that I want to go over into today's video. I have some video clips specifically that I really think you should watch, especially if you're worried about the, price action right now. I mean, obviously, if we have a look at this chart right here, you could see that we were really just bouncing around in this range for a little bit over 2 months. And right here, we are starting to fall out of it. Now, this wouldn't be the first time we fell out. I mean, right here, we did have a dip. We had multiple dips here. We came down pretty deep, down to about 56,000, back in this area. This was back in early May. And, for the most part, what we're doing now is we're finding a little bit of support right here on this upwards trend. Now, if we were to break this, does that signal that we would be going much lower? Well, I mean, there is a possibility of retesting this area around 52,000. But, before we start throwing out these crazy numbers and saying that the bear market is over and saying that we should all just sell our bags right now and that was it, I think we should really dive in and have a little bit of a look. Now, one thing that I've heard some people saying is the Mt. Gox repayment. Obviously, they're supposed to return over 140,000 Bitcoin to these investors. And the idea is, well, considering how long ago this exchange got hacked, these people have potentially been waiting since 2014. So yeah, that's a decade of waiting for your Bitcoin. So probably they would want to take some profits and sell, right? That's the theory. Although the only issue that I have with this particular story is we've heard this before. I mean, we've been hearing about these Mt. Gox payouts, sell-offs, FUD articles for a very long time. And my opinion really is just get it over with. If they are going to give it to them and they are going to sell, let them sell. Yeah, it might suck. We might get some kind of a little mini crash or something. Who knows? But then it's over with, right? And then that selling pressure is gone. So every time I see these Mt. Gox articles, I really don't care too much really when I look into them. But I do want to go into the charts today because there's a lot we need to talk about what's happening. Is the structure breaking? Are we seeing a double top like we saw the last time? But I want to save the TA for the end because I kind of have talked about these levels for a while and we did explain that we had the price action. I mean, just to put it into perspective before I even get into the video, we put in a new all-time high for Bitcoin before the halving. That's never happened before. So, the way that I kind of see it is with the ETFs and the excitement, I think the price action got a little bit ahead of itself, right? Generally speaking, we don't even really see new all-time highs until a couple months after the halving. We already saw that, right? So that kind of tells you that maybe, we were getting a little overexcited, but that doesn't change the overall view on everything. So I wanted to start off number one, rather than explain it again myself. Anthony Pompliano, you might have seen this clip. He was, over on CNBC discussing what's going on and what's really happening. And, the question is, should this be happening? Obviously we have these ETFs. So shouldn't this have been majorly bullish? Well, we've talked about the fact that these types of things take a long time. It's not like the ETFs go live and then every single financial asset and all their clients, the managers, they all jump in. No. So I wanted to have him explain this to you. And I want to continue a little bit more on the fundamentals before showing you what I'm looking at in the chart. So make sure if you're interested in the chart specifically, stick around to the end of this video.
Do you have 3 reasons why Bitcoin has come down from above 70 to where it is now?
I think it's important first to put it in context, right? Bitcoin's up 40% year to date. It's up 100% over the last year. So in terms of volatility, this is pretty expected. What we've seen in previous bull markets is that there's 4, 5, 6 different drawdowns of 30% or more. We're down about 15% or so. So this is right within kind of the band that you would expect. I think that what occurs is when an asset goes up a lot, people start to take profit. And so what we've seen is this explosive rally to start the year. People naturally take some of that profit. We're also seeing a lot of people doing the basis trade where they're basically going long the spot market and they're shorting futures. And so what that is doing is it's dampening some of the volatility, which allows for leakage and some selling. And then lastly, I think is we get to the summertime, right? You see this, a lot of people in the public markets will say, invest till May and then go away. And so you're starting to see some of that as well here, where people are seeing these really explosive moves at the beginning of the year. And then also Q4 tends to be a big kind of quarter for crypto as well. And so Q2 into Q3 tends to go kind of sideways. I think that's just what we're seeing.
Again, as we said, it's only been 4 months, right? They launched in February. Some of these people, these old dinosaur traders, hedge fund investment manager people, whatever, family office, all those big fun words we like to throw around. Realistically, a lot of the bigger institutional players, they don't just jump in. They want to see a little bit of a track record, right? So we had a lot of people making a lot of profits. And yeah, of course, maybe they took some profits. And, you should take profits as well. If you are overexposed and you're struggling and you're freaking out right now, then that is a sign that maybe you need to just kind of reallocate a bit, right? Hold a little bit more in cash. You don't want to have bills that you can't afford and you can't pay. But, again, getting back to that idea, we'd still really, it's only been a few months.
Maybe you get profit taking too. Is that part of what
historically we've seen a run up into the halving, and then we've seen sideways to slightly down.
This is the first time you had a spot ETF though.
Correct.
Are they have as much Bitcoin as they need now to satisfy clients?
No, I think that what we've seen in the ETF flows, when you go and you analyze it, about 80% of the flows into the ETF were actually retail, right? People thought it was going to be big institutions, but only 80% was retail from some of the analysis. What takes a long time inside of these organizations is they've got to go to their investment committees, they've got to make a case, they've got to go through the approvals. If you're a financial advisor, the number one job you have is don't get fired. And a great way to not get fired is to make sure you've done the work, make sure you're risk mitigating, and really understand what you're about to buy. And the last thing I'll say is, the thing about Bitcoin that always cracks me up is when the price goes down, people get upset. But I always tell them, you maybe should go check what you own. Because if you have true conviction, when the price goes down, you should be excited to go buy more of it, right?
And so
I was literally saying this morning that I'm going to go to the office, I'm going to go buy some more, right? And the reason why that's so important is as the price goes down, if you have a 10-year time frame, you're just getting it at a cheaper price. You're dollar cost averaging down. And so I do think that Bitcoiners, more so than almost any other asset class, historically they've bought, they've held for a long time, they continue to dollar cost average, and they're using these timeless investing principles to create real wealth for themselves.
I don't know, if you bought at 8, it's tough to buy at 60.
Well, if you bought at 8,000 and you still have cash, right, where else are you going to put it? I think that's the big question is if you want to protect your wealth and you're getting paid a salary every single year, that net new capital, where do you put it? You can put it in the stock market, you can put it in Bitcoin. But again, if you go and you look over a long period of time, what is beating inflation? Gold is a great example. Over the last 5 years, if you've held gold, you've actually lost purchasing power in real terms.
Right.
And so naturally, Bitcoin ends up being one of the only solutions that people are picking.
And just to hit home again on that philosophical point, I know, and I'm kind of doing the video backwards today, starting with the clip, starting with the big why rather than just like, hey, what's happening on the daily, which we'll get to what I think is happening on the price action, honestly. But what we can tell from sort of history is that, guys, when it comes to something like Bitcoin, you have to understand that there are still a lot of people who do not understand it. And there's a lot of people who they call them fair weather friends or fair weather investors, right? They just hear about something. Oh, GameStop is pumping. Let me buy some. I don't know anything about it. I don't care. I just heard the price was going to go up. Or these AI stocks or Nvidia, right? I don't know what Nvidia does. I don't care. It's a buzzword. Buy some, right? And the problem is when the price starts to go the other way, they lack that conviction because they don't actually have that understanding. And that's why it's been easy for me to stay in these markets for as long as I have, because I actually understand the long-term value of Bitcoin. In fact, you had Gary Cardone. He was over on Mr. M's podcast. Mr. M, he's a very good friend of mine from out in Dubai. Really cool, chill dude. I've been on his show before. And I really like this interview because Gary sort of goes into the fact that we've never had anything like this before, right? So trying to compare Bitcoin to something like Nvidia or something like AI, or even really truly thinking that Wall Street really understands what's going on, or, there's some massive ultimate manipulation to just catch you off sides. To be honest with you, if they were so smart, why did they miss out on so much of the gains as well, right? So that is also something you need to consider.
I've been in markets since I was 22 years old. I'm going to tell everyone something here that will defy everything you've ever heard from Wall Street. Wall Street pricing is never correct, okay? It's not efficient. I don't care how many McKinseys and Cap Gems tell you it is. These markets are never right, okay, ever. So to look at NVIDIA's price 2 months ago and to realize in one day the market cap of that company changed by $250 billion, not million, $1 billion. 1 $250 billion, about 25 or 30% of their market cap changed, 12% of their market cap changed in 12 hours. My question is, well, if all you analysts are so smart from Harvard and Brown and Yale, why did 400 of you miss $250 billion move? So we know these markets are not correct, okay? I mean, nobody even knows what GameStop's worth. So I am certain that nobody understands Bitcoin, dude. In fact, Bitcoin has no way to measure. They're measuring Bitcoin with a different tool. These power models that everybody's like, hey, look at what Bitcoin's going to do. Ain't no models ever charted a finite product, dude. Never. We have not ever had in the history of mankind the ability to chart a finite product because there aren't any. Oil is not finite. These charts are based on natural gas, US dollars, lira, other commodities, and they're saying, well, those charts are going to do what these charts did, and Bitcoin's going to follow it. We'll see. I'd bet $1 million they're all wrong. I think generally they're right, going up to the right direction. So to answer your question, first off, I walked away from it because it was missold to me. And I blame the early people for being, not all the older people, but you guys were too passionate. You let your passion run away from how markets really are developed and work. It was never going to get adopted by Joe User. Big message problem. Peer-to-peer does not mean, it's nowhere in the white paper it says 8 billion people are using Bitcoin to buy potato chips, dude. Yeah. Okay, no, there is nothing in the damn white paper that says that. What the white paper says is that this is a peer-to-peer currency. Awesome. Well, so is gold. Okay, it doesn't negate any. US dollars will still be a peer-to-peer currency because at close proximity, US dollars are very powerful. Okay, it's light, easy to move around, as long as you and I are within 20 feet of each other. But outside of 20 feet, it gets a little messy. I got to do wires and transfers and give it to a friend, and he drives down the street and gives it to the buddy, and then he picks up the product. That's not a market that's flowing massive volumes. Now, where are we headed? We are headed to a fractured, globalized market. Globalized, but it's fractured. So you're going to have multitude of marketplaces that are buying and selling things. They're all going to be using their various baskets of currencies. They're going to have CBDCs. Let them roll them out, dude. I'm not worried about the CBDC. There's going to be 108 countries competing with each other to have their own CDC. Bring it. Some of them are going to be private blockchain. Some of them are going to be public. Joe Consumer gets to decide what he's going to play with. Okay, I'm quite certain that is going to lead to massive adoption on Bitcoin.
All right, so let me hop into some TA. Without any further ado, let's just seriously just forget our emotions for a minute, okay? Forget all the doom and gloom and everybody saying we're going into some kind of recession and Bitcoin's topped out and all that. Hey, it could be topped out, right? I could be wrong. I could eat my words, right? Totally possible. I'm not saying I'm perfect in any way. But why don't we have a look at the charts before we jump to these types of conclusions, okay? So again, is Bitcoin in a bear market? Well, traditionally, if you were trading stocks or indexes or something like that, a bear market really is 20% off the highs, right? Well, if that's the case, then Bitcoin's already been in multiple bear markets on, according to the charts, if you're going to look at it traditionally. So, I mean, if we just have a look back here, right in this area, we had this crazy pump when Bitcoin broke around the $20,000 range. We got up to 25, Bitcoin fell 22%, right? So this was a textbook bear market. Were we in a bear market? I think history shows us we weren't, but at the time, falling over 20% could be pretty scary. So we had a 22% collapse there, right? We had a 20% collapse here. Over here, when we had this high on July of last year, that was around 31, and then Bitcoin fell all the way down to 24.7. That was another 22% correction. When we had the launch of the ETFs, Bitcoin was up around, spiked up to 49,000, fell down to 38. What was that right there? That was a 19, almost 20%, drop. And then just before, when we hit the highs right here, Bitcoin came down and did a 22.5% drop. And we actually did reclaim a little bit of that 21 exponential. So what is Bitcoin doing right now? You know, if we go from the top to where we are right now, well, Bitcoin's down about 19%. So, I mean, you know, it might seem a little bit more scary because it's happening to us actually right now live. And whenever you're going through something, it always seems like it's the worst. But really, we've already seen this happen for Bitcoin before multiple times, right? And we do have, and you know, not to call these super low levels, but we still are ultimately in the range. Yeah, we might be dipping a little bit below the $60,000 range, but you could see we have the 0.786 at around 57,362. And, you know, that acted already as support, right? So yeah, I mean, sometimes you do fall a little bit below these exponentials, but if you have a look, we have nothing but upward sloping trends on all the major moving averages. None of these are starting to curve over. You know, it still looks like we're going to eventually have a golden cross at some point. And like I told you guys in a few videos ago, sometimes you do see Bitcoin, you know, a little bit boring, especially in those summer months. And, you know, don't forget, we did put in a new all-time high before the halving. So like, if you guys want some like doom and gloom prediction, some crazy doom and gloom, which I don't really know why, guys, because, you know, even if you have a little bit of a look here, this is actually kind of interesting. So if you have a look down here at the momentum waves, you know, you kind of have a little bit of a head and shoulders pattern right here on Market Cipher, right? You had 1, 2, 3, right? And yeah, that sucked, which by the way, just pointing this out, if we start from the center, right, we had a sideways range of about 154 days here. Over here, you know, we've gone sideways for about 112. And for some people that are saying that this is looking like this double top, well, yeah, I mean, it might resemble it a little bit, but, you know, this double top was ultimately 252 days, also with a 50% correction in the middle. So I would say that it's a little bit different. But getting back to this, you could see the similarities of potentially, you know, what we're forming here. Only difference being obviously the RSI is a little bit higher. So that does signal that there is a little bit of weakness. I'm not going to sit here and sugarcoat it and pretend like we're just going to go to 100,000 tomorrow. Yeah, there's some people taking profits, but if you want the doom and gloom, well, we have massive support here and here, right on the bottom of this parallel channel. So if we were to fall to the top, and by the way, guys, this is assuming we're going straight down. This is assuming we're going to fall straight down, like today, like we're just falling straight down. That's 50,000. And if we were to fall straight down, 41, you know, would catch the bottom of this. However, you know, that's not how markets play out. I mean, look, we come down here, we have a bounce. We have a bounce. We fall to the bottom, we come back up, we find it as support, we have a bounce, we're off to the moon, right? So who's to say that that couldn't happen again? We come down here, we have a bounce, right? Go back up to 62, 63, bounce around, then come down here. You know, that could be the ultimate freak out, 47. I don't know. I'm just kind of making these numbers up because I don't really think this is going to happen, but I know some people want to have that entertained. And then personally, I still think that we're going to continue on this uptrend, right? The trend is your friend until the end, and the trend has not been broken yet. I think you can clearly see, you know, we're way up here, guys. We're way up here. So, you know, if you were panicking down here, I don't know, you know, I don't understand why you'd be panicking up here when we're having similar moves. I guess the only thing you could say is, yeah, we're falling into the EMA ribbon, but the thing that I look at more than, you know, just falling inside of it, you know, like we had this COVID scare back here. That kind of sucked, right? That was a bit of a black swan event. But really, you know, we're not seeing anything invert. I mean, all of these moving averages, this is the order that you want them in, from deep red to yellow, right? Because it goes from, you know, the largest to the lowest. So we had that inversion right around this area, right around when we were having that sideways action. And currently, you know, it doesn't really look like any of these are looking to cross over just yet. So I mean, as far as the charts are telling me, everything is still intact. But like I said in my previous video, you know, we have good news and we have bad news. You know, the good news is that the market is intact. The bad news is that, well, we might have to go down and sideways for a bit. And also, you know, because of the exuberance of the markets, the actual overall bull market may be shorter. And, you know, it doesn't help that, you know, we've had 3 red days on the S&P. But the interesting thing, if we do compare, is that if we look at Bitcoin right now, remember how we were talking about the DXY? Well, on this weekly, the DXY is in fact starting to potentially get a rejection here. I mean, I thought it would have gone a little bit higher, but, you know, maybe people are front running it. Who knows? And if this starts to break down again, then that would only be good for Bitcoin and crypto. Now, there's also one other thing I wanted to just mention, and this is something we have to be real about, okay? Now, this is just, I should probably save this for another video. I don't want to make this video too long, but look at this, guys. If we go over to a site like CoinGecko, we have 14,820 coins, okay? Now, to put that into perspective, Back in 2017, when I first got into crypto and we had the first bull run, we had maybe 300 altcoins around that area, right? So there wasn't really a lot to pick from. So that didn't dilute it as much. Then, go fast forward to what we did in the previous cycle. How many altcoins did we have around then? Well, we started getting into the thousands, right? 1,000, 2,000, 3,000 altcoins, right? Today, we have 14,820, and I guarantee you that number's not even accurate because there are literally meme coins that are made every single day. Now, what does this do? Well, unfortunately, if you're in a scenario where you still don't have full-on institutional adoption and the retail is not really coming in, you're not seeing that exuberance. So the only ones that you're seeing are the people that have already been here or the select few of retail that decided to get into the ETFs. What you get is a case of recycled money. So it's a lot of the same money moving through the ecosystem, right? So you're not having these glorified altcoin seasons where everything is pumping. No, you have, oh my goodness, look at my friend who just made all this money on a meme stock. Let me sell my, Bitcoin or Ethereum or Solana so I can hop into this coin, right? Then they start to lose money, they panic sell, right? And what happens is it creates an ultimate downwards pressure because you're just recycling a lot of that money. And believe it or not, going from 300 altcoins to probably around 20,000 or more realistically, that also dilutes the market. And without a lot of those newer market participants, or at least those bigger institutions who are primarily focused on things, for example, blue chips like Bitcoin and Ethereum, you are going to see these moments happen. And, if you go back in history, there are a lot of boring times in the markets. It's not always up. There are a lot of videos I've had to make over the past years where nothing happens. Absolutely nothing happens. Or we just go down for 2 months, right? So you have to take the good with the bad, but the structure itself, if you just want to, for example, look at this monthly, the monthly chart not looking too great. I don't like the fact that, this candle is below the previous candle. But at the same time, you can argue it's still virtually in range. If you come all the way back here, this is a little worrisome, closing below that 61,000 because that's where we closed the previous candle. But again, if you look at this, you could have said the same thing about this right here. Well, this candle completely, obliterated that candle. And then we had 2 red candles with this candle lower than that candle, excluding the wick. So, we're not even lower than the wick, which the wick of that candle or the tail, whatever you want to call it, is around 56,000. So ultimately, again, having a look at, if I zoom in here, I think one of the worst case scenarios would be if we look at this MVRVZ score, we're not even up in like this golden area yet. And what I see is maybe if you think it's a worst case scenario, you're having something like you had here where you just have sideways consolidation, which is sort of I guess bear market if you want to say it's over 20%, but really it's just a sideways crab market to potentially down market as we build that base within, a bull market of the larger move. I hope I'm not in the way here. And you could see that, you could argue that maybe these are similar areas that we're seeing on this score right here. But again, just to take it all with a grain of salt in perspective, the dip that we're seeing today, as bad as it seems, because, we fell below 60,000, it's the end of the world. Okay, well, that we still have an upwards trend and we still haven't even gone more than the previous. We haven't even gotten to the 22, 23 yet, remember? And what's crazy is we used to see 30%, 40% crashes, and this used to happen all the time, and we've only been hitting around 22, 24. So even if we had a 30% correction, let's just actually see where that would take us if we go back. Where's my Fibonacci's right here? Let's see, from top to bottom. If you come down here, you have the 22%. Yeah, that brings you right to around 5.7. And the 30% would bring you to around 52. So it's not out of the cards. We've seen these things before, but I've dragged on for too long. That's it for me, guys. I wasn't even going to make a video today, but like I said, I remember when I used to make videos, or when I used to not make videos, I used to watch videos of other YouTubers back in the day. And, we'd have these moments where, everyone's doom and gloom and everything's going, to zero. It was kind of nice to just, be refreshed on things. So again, I'm not saying just sit on, if you're making profits, take it. And a lot of people who are watching this channel, if for some reason you're not in profits, then the only thing I can think is you've either bought Bitcoin in the past 2 months or you just gambled extremely heavy on the altcoins. Because even if you've been following the channel just since January of this year, I can't imagine how anyone is not sitting in profits in their Bitcoin. Yeah, they might be down compared to where you were 2 months ago, but they're still ultimately up. And again, Bitcoin is the only finite asset on planet Earth that we really still to this day, most people don't understand, right? So that's my video for today. Probably this video, I mean, this video also goes for tomorrow and the remainder of the week, although I will make updates if I see anything, but just want to kind of let you guys know where we're at. And, you know, it's hard not to tune out the noise, and it's hard to not be emotional when it's your money. I get it. But at the end of the day, this is not signaling to me that the markets are in a bear market. I mean, you know, there is a point where you have to say it's in a bear market, and you have to admit that. And then you have to make your own decision. You can try to time the tops. I don't care what anybody says. Nobody gets the exact bottom. Nobody gets the exact top. If they do, they're lying, okay? It just doesn't happen unless by complete, pure, absolute luck, right? So at the end of the day, if you are uncomfortable, you feel that you need to take some chips off the table, that is something that you need to talk to yourself about, right? If you're worried, right? You know, you want to have cash on the side. You want to be able to pay your bills. I'm not saying mortgage, you know, don't pay your mortgage and just only go in Bitcoin. I'm not saying to do that, okay? But what I am saying is if you are responsibly investing and you understand the value of Bitcoin and you're investing, I don't even want to say what you're willing to lose, because I really just can't imagine like everyone Bitcoin goes to zero. I mean, that would just be like devastating, like 15 years for what, right? For what? But at the end of the day, I ultimately think, you know, as long as you're not over invested and, you know, you're being sensible about it, dips are for buying, right? Dollar cost average, right? So that's basically where we're at, guys. I hope you guys had a great, I hope you guys enjoyed this video. You know, again, if you guys do want to, I should probably bring this up because this ends on the 30th. If you guys want to get those Blowfin discounts, you can get that below. You know, you do a net deposit and they'll give you money to trade on the account if you're interested. It's free money. If you lose, it was free. If you win, you get to keep the bonus. So, or you get to keep the profit. So it's a win-win, guys. Check out these tutorials again that are popping up right here, right now, guys, if you want to learn how to trade. Until next time, stay crypto. And of course, my friends, peace out.